Over the years, the AIM market here in London has proved a big success. From an investor point of view, it's possible now to protect investments from inheritance tax bills so long as you choose qualifying stocks. And there are now a record 17 companies with a market cap in excess of £1 billion. Chris Boxall is portfolio manager at Fundamental Asset Management and focuses on this area.
Yeah.
Let's take this business about the £1 billion market. Psychologically, it's very important. And here we now have 17 companies on AIM above that. I never thought in, not 1995, when I saw this thing launched as the alternative investment market, that we'd be here sitting talking about £1 billion company.
I know, it's staggering, isn't it? It's staggering, and it's accelerated from last year. I think last year there were only 11. Now we've got 17. But you know what? So many people still think of it. Oh, it's full of tiny, risky companies, isn't it? However much you try and tell them this is a market now with some sizable business. I mean, ASOS could have been in the FTSE 100 for many, many years and has chosen to stay on AIM. And now ASOS is being chased down by the newer kid on the block, Fever Tree Drinks.
Well, let's take a look at these two. I mean, Fever Tree is an amazing story, and I don't know when it started. I don't know what the origins of it were necessarily, but I do know now that the man on the street, or the woman in my case, my wife, talking more about it now because it's something that she prefers to drink, the tonic that they supply. So there must be something in it.
I think it's the perfect example of a type of stock where the man on the street, the lady on the street, knew well in advance of the stock market probably this business was a huge success. And actually those that, when it came onto the market, those like my good self that were probably too fixated by more simplistic valuation methods maybe missed out, and it's very difficult to come back in once you've missed out because you're constantly thinking the valuation stretches, but this business has delivered handsomely ever since it listed, all organically. It's been very, very simple. It subcontracts all its actual manufacturing. It's just really marketing focused, and it's played from the outset on the need for a premium mixer for gin primarily. I mean, it's created a new category, they say, although people do forget that Schweppes owned the premium mixer sector many, many years ago, and it's done terrifically well. And as you say, it was obvious that anybody that liked gin, these guys were doing doing really well for some time. Been doing really well for some time.
Let's move on to ASOS very quickly and ask the question that one has to ask of those that invest in perhaps maybe Fever Tree as well. Why are these big companies? I mean, ASOS I think just pips Fever Tree to the post in terms of size at 5 billion sterling. Yeah. Why is it, and indeed Fever Tree, still on AIM at these levels?
I don't think it has any reason to move. It has institutions, the large institutional holders, because when you're 5 billion, you have a lot of big institutions owning it. Clearly, they're not bothered which market it sits on. It could give it flexibility in terms of acquisitions. It hasn't needed that. It hasn't needed to raise a huge amount of money lately, and it probably sees no reason to leave. And also, it's very supportive to those early backers because this was a really high-risk business when it first came on AIM. I think the shares dropped. I think the secret to buying ASOS was not when it listed. It was to buy it about 3 or 4 months later because it dropped about 20%. Right. You know, it looked a complete high-risk basket that nobody wanted to touch. And so those that have, I doubt there are many that held on fully all that time, but those early backers have been rewarded. You know, they all the stocks outside the IHT net now as well, and I suspect as long as its shareholders, all of it's the majority, are happy for it to remain, it will remain so. Yeah. And it's not a bad market for a lively, more youthful business like ASOS, selling fashion. It's perhaps a better market than the main market.
I noticed another stock that you've got on the list which has gone to £1 billion plus is Keyword Studios. What's happening with this stock?
Well, this is an incredible story. I mean, this business listed not that long, I think it was 2013, around that time. I think it's just shy of £50 million, and it's grown now in quick time to over 1 billion. It's an absolutely fabulous story. It provides services, artwork, localization services to video games companies. So it helps them produce video games and make them applicable to the various markets. But it's grown not organically but by acquisition. And that's so it's a very different beast to those other companies we mentioned, ASOS and Fevertree, which is largely organic growth. And it's been a terrific up to now acquisition story, but now at the current valuation it looks very, very punchy indeed. So it's really got to keep this going, and for these acquisitions to really deliver, you know, 1 and 1 makes 3 kind of scenario. But up to now it's been one of those stocks again that from the very early days you'd have looked at the valuation and questioned it, and you may have looked at the strategy and how many deals they're doing, is this wise, but up to now it's delivered handsomely for shareholders, and it gets a momentum all of its own. From small shareholders being involved, then it attracts bigger institutions, so they're constant buying, it's raising more money, using the market for what it's there. I mean, there are worries around acquisition, I mean, buy and build strategies, but this one appears to have delivered. Important here, it's in a high growth market. So this business is buying and building in a market that's growing very, very strongly and very, very active and attracting a lot of interest.
It's interesting actually, talking about high growth in an area where AIM, of course, is making all these new records and so forth. We've got another stock which you've wanted to talk about called Victoria, which I find interesting. It's not a high growth stock, it's not a high growth area. It's a carpet supplier, I believe? Yeah,
it's a carpet manufacturer, and it's been well recreated over the last few years. A new chairman came in who's revitalised what is a very old business, and much like Keyword Studios, it's very much a buy and build strategy. Unlike Keyword Studios, the underlying market isn't growing very much. In fact, I would say in the UK it's struggling a lot, and a lot of its business is in the UK, although it's now geographically a lot more diverse. But that's our issue. It's got a big debt load. It's recently announced, issued a trading update, which for the first time highlighted, I think that they pointed to 3% organic growth, which is peanuts. And that only, well, the implication was that they were having to offer pretty good deals to even get that. So that's 3% top line growth. And this, so far, it's been a huge success story following this, following the intervention of this new exec chairman who's got quite a big stake in it, the business. But you just wonder how this can keep going when underlying markets aren't that strong. It's carrying a very high debt load. The irony of this one as well is that while it's acquiring businesses at a 5 times EV/EBITDA multiple, don't want to get too technical, but it itself is valued at double that. So the market it is buying into, the sector, the flooring sector, carpet sectors, is wanting 5 times, whereas the stock market, for some bizarre reason, thinks this thing can create magic, you know, gold out of nothing, and give it a double the rating. Now, just got to keep that going. As I say, the chairman's run a pretty good show so far, but it's proving tougher, I would say. And always beware the buy and builds. Dare I mention conviviality? You know, beware the buy and builds with high debt loads. They can, if they unravel, and if the underlying market isn't supportive, it can be spectacular.
We've spoken to you before about AIM and the ability to be able to shield investments from the taxman at death through IHT. And I noticed actually you pull this out as a point to mention that UHY Hacker Young has said there's a record amount of money in this particular part of the business.
I mean, they think the tax take, the inheritance tax take was up quite sharply, and clearly most of the country's wealth resides in property, and it's very hard to get that out of the IHT net because you can't make it. It's not liquid. However, for those that have equities already, there's a compelling argument to switch a good chunk of those into AIM stocks, or not just AIM stocks. I mean, Hacker Young was mentioning private companies. There aren't just opportunities in AIM, but they're also there are private company platforms. A lot of the peer-to-peer stuff, crowdfunding. It's all quite interesting for the potential business property relief, or business relief, for instance, now called, to mitigate potential inheritance tax. And
I know one of the services I know that you provide, amongst others, is that you guide people into which stocks qualify, because they don't all qualify, do they, on AIM?
No, they don't. And we've got a little fundamental asset management as an associated business called Investors Champion, and they offer a definitive guide to the qualifying companies on AIM. It's a search tool. You put in the ticker and it tells you. It's not absolutely cast iron, but it gives a very good indication of what qualifies and what doesn't, and why it doesn't qualify. But we are seeing a growing interest driven, you can see it by UHY is mentioned there in their report, but a growing interest amongst investment advisors, IFAs, to direct more and more business to AIM stocks, but because they can see the benefits. And there aren't a lot of the other tax loopholes have been closed. This is a very, very simple tax benefit. The investor has to take a little bit more risk because they're investing in smaller quoted companies, but in exchange for that risk, they get a potential inheritance tax break.
You're talking here, aren't you, about platforms? Is that right? I think you mentioned
a lot of IFAs now increasingly work through what's called wrap platforms. So all their clients' assets are administered by a central pool, and there are several. There's one called Transact, there's one called Standard Life, and there's one called Nucleus as well. And Nucleus is one that has actually recently floated, ironically, on AIM. And it's a pretty simple business. Its job is to administer and custody the assets of clients who are advised by independent financial advisors. So it makes it's invested in its technology and its systems, and it makes a nice return on capital. It administers now, I think, about 14 billion on those lines. So quite a big operation, and it's one of many. And it came onto AIM. Shares got off to a reasonable start, but have subsequently fallen back a bit. But we like it. It's a nice little business. Maybe growth. It's been around for a while. Maybe struggling to grow that quickly, but returns have been good.
There's another one, isn't there? Simply Biz Group, I think, is another one you've highlighted.
Absolutely, Simply Biz.
Which has done better.
Yeah, it's another interesting one. Simply Biz, it's just attracted a little bit more attention. It just came out with the results, and it's slightly different in that it not only provides a platform for its and services, more compliance services for advisors across not just investment advisors but mortgage advisors, insurance. It provides that service to them, the regulatory bit, but it also generates fees from the product providers. It helps them market their products to the other users of their services. So it's getting fees both sides. And what was really surprising with this business, is really unusual, is that one of the joint chief executive came out and bought a load more shares after the results this week, and that's quite unusual so soon after IPO. He's not the major holder. The major holder is the chairman, but that's a big sign of confidence thing. Again, very simple business. Ironically, the advisors could probably understand it. It's on AIM now, so there's maybe a natural synergy there.
Yeah. Look, Chris, we've got to leave it there, but thanks for joining us. Update on some of the developments of AIM over the summer. And the market there, as Chris was saying, continues to go from strength to strength now, with 17 companies on the list now of stocks in excess of $1 billion market cap. That was Chris Boxall from Fundamental Asset Management.